Welcome back to the Wall Street Podcast. Today, we're plunging into a really insightful analysis by Morgan Stanley. It's their 5 themes on the gig economy and our picks report. This just came out August 7, 2025, and it gives this great macro take on the gig economy, right after the latest earnings from Uber, DoorDash, Airbnb, Lyft, the big players.
Exactly. And our focus today is really distilling the critical takeaways for you, our listener. We want to highlight the key shifts and the valuations that are really shaping this dynamic sector right now.
Okay, great. So let's unpack these 5 core themes Morgan Stanley identified. First one up. Platform and scale matter. And this really seems to be about Uber versus Lyft, doesn't it?
It does. Morgan Stanley highlights that Uber is clearly gaining market share from Lyft. We saw superior growth in the U.S. for Q2 from Uber, and those trends seem to be accelerating into Q3.
Right, while Lyft is looking more stable to maybe even decelerating a bit in the U.S.
It really underscores how Uber's scale of that integrated platform is creating a powerful advantage, almost like gravity, as you said.
Yeah, that makes sense. Okay, theme 2, food delivery as a staple. Uber Eats and DoorDash. They're seeing strong user and spending trends.
That's right. It seems driven by, both the category growing overall, but also product improvements, better personalization.
It feels like it's moved beyond just a convenience, hasn't it? More integrated into daily life for many.
Absolutely. And the report suggests these assets, DoorDash and Uber Eats, might actually be undervalued, given how durable that growth looks.
Interesting valuation point. Okay, third theme, the autonomous driving debate. Still early days?
Still very early, according to Morgan Stanley. Their view hasn't really changed much here. Uber mentioned some early incremental trips in Austin from Waymo, but
not enough to really shift the needle on how investors view the whole AV threat versus opportunity thing.
Exactly. It seems it's still putting something of a ceiling on those Uber and Lyft multiples because of the uncertainty.
Got it. Fourth theme, accommodation growth. This is Airbnb and Booking.
Yes, and the interesting thing here is that they're growing room nights at pretty similar rates.
But booking space is roughly twice the size of Airbnb's, right?
That's the key point. It highlights that Airbnb's strategy, expanding beyond its core, it's taking time to really drive faster overall growth compared to the giant.
So a challenge for Airbnb there. And the final theme, number 5.
Social travel ad spending. Both Airbnb and Booking demonstrated strong marketing spend and, crucially, good return on that spend through social media.
Which hints at good things for
Meta platforms, potentially. Morgan Stanley sees this as a possible material driver if Meta can unlock more of that travel ad spend, a sector where they've historically been a bit under-indexed.
Okay, that covers the 5 themes. Let's dig a bit deeper now. Morgan Stanley seems quite bullish on Uber and DoorDash. What's really driving that confidence, is especially given profitability concerns we often hear about in this space?
Well, for Uber, it's that strong platform performance. The multi-product strategy, loyalty programs, it's working. They saw a 15% year-over-year jump in MAPCs, their monthly active users, and 19% growth in mobility trips. Solid numbers.
And DoorDash.
Broad-based strength. They hit all-time highs in frequency subscribers, leading Morgan Stanley to raise their price target to $300.
But Uber still trades at a discount to DoorDash on a growth-adjusted basis.
Yes, a material discount on growth-adjusted EBITDA and free cash flow multiples. It suggests the markets may be valuing DoorDash's pure-play food delivery dominance more highly right now.
Interesting divergence. Okay, shifting gears to Airbnb. Why the underweight rating from Morgan Stanley? What are the main concerns there?
Well, as we touched on, their room night estimates have been lowered. They're now projected to grow at similar rates to Booking, despite Booking's much larger base.
So that expansion strategy isn't quite firing on all cylinders yet.
It seems slow to yield significant results. And the underweight rating really reflects valuation concerns. Airbnb's growth-adjusted multiple remains at a substantial premium, about 25% compared to Booking holdings.
Right, so the valuation looks stretched relative to its direct larger competitor, given the growth picture. Okay, let's connect this back to daily life. For the average consumer, what's the real impact of these trends in food delivery, rideshare, travel platforms?
Well, for food delivery, the strong performance means continued convenience, probably more product improvements, better personalization trying to keep you engaged.
Makes sense.
In rideshare, Uber's focus on affordability, like passing on insurance savings, could directly benefit users. Broadly, though, you're seeing these big, scaled platforms continuing to invest and dominate. That's likely to shape future services and pricing, although, as we said, autonomous driving's immediate impact on your experience day to day. still limited.
So this ongoing evolution really hammers home the importance of platform scale, doesn't it? And strategic investment.
Absolutely. Scale and investment are key for driving that growth and eventually profitability, and the valuation differences, between Uber and DoorDash or Airbnb and Booking. It just highlights that even in a hot sector like this, you really need selective analysis for smart investment decisions.
Which brings us to the final thought for you, our listener.
As these giants consolidate power, the big question remains, will this increased scale ultimately lead to more innovation and better prices for you in the long run? Or could it eventually mean less choice and perhaps higher costs down the road? That's something worth pondering.